All right, moving on. And last for today is Outcrop Silver. It's actually Outcrop Silver and Gold now, and this is a good guess says that it's a silver and gold exploration company with four assets in Colombia. The company is listed on the TSX Ventures Exchange under the ticker symbol OCG, where an average of about 200,000 shares trade each day, with a 52-week high of 41 cents and a 52-week low of about 11 cents. With a market cap of 38 million Canadian dollars and about 255 million shares outstanding today, this is a 15-cent stock. Again, not surprising, another stock that shows you the state of the market trading at close to 52-week lows. There are about 96 million warrants and 24 million options, resulting in about 370 million fully diluted shares. Management and directors own 12% of the company, and Eric Sprott, so the man, not Sprott Institution, so Eric Sprott owns about 14% of those shares as well. As of the last financial statement, which is dated August 31, which also happens to coincide with the company's fiscal year, the company had about $3.5 million in current assets, most of which was in actual cash and some prepaid expenses next to that. That sat on the balance sheet against current liabilities of about $500,000, most of which made up by account payables and a small portion of a near-term lease liability. But there is no long-term debt on this balance sheet. As it always is, though, you want to go to setterplus.ca to see the most up-to-date financial data yourself, because after the statement was published, the company's obviously been active. They've also opened an ATM facility, which allows them to sell shares from time to time into the open market, and that is worth about $5 million. Outcrop's fiscal year, as I said, ends on August 31, and during that was fiscal 2023, they had spent nearly $9.5 million in total, about 57% of which went into actual exploration activities, which means that, again, over the last fiscal year, the company spent about $250,000 a month on G&A, and that's, of course, if we subtract the share-based compensation. But numbers aside, as I said, the company does have four projects in total. They're all in Colombia, but there's really only one that counts here. There's really only one that is advanced enough to be of note, and that's the one that is going to get the most attention today. And that's the Santa Ana project. It lies southeast from the capital of Bogota, and it's a 100% owned, narrow, high-grade, primarily silver epithermal veins project that covers almost 28,000 hectares, situated in one of the highest grade silver districts in Latin America, and definitely in Colombia. And that's, of course, the Mariquita district, which is mostly characterized by, again, epithermal precious metals veins. So this is your typical Colombian structure of sort of narrow veins, but high grade. And Outcrop has got six map veins, vein zones, not six map veins, zones, vein zones, across a 30 by 12 kilometer piece of land, resulting in a total cumulative vein zone of over 60 kilometer. But after a recent field program, they believe there's more in there. So that's also something we're going to be talking about here. After drilling over 330 holes here, Outcrop has defined an MRE within 7 of those mineralized veins. And yes, now we are talking about actual veins. So 7 of those veins, and I believe they have 22 veins that are sampled in total. 7 of those were included in this MRE, suggesting again that there could be room for growth of the resource here. The MRE that I'm referencing that shows over 24 million ounces of silver, contained silver equivalent, that is in the indicated category. We don't love equivalents, but this is over 70% of the metal is actually silver. So I guess I'll allow the EQ conversion here. And then there's another 13.5 million ounces of silver equivalent, again, the majority of which is actual silver in the inferred category. So in total, we're talking about 37.5 million ounces of contained metal in here. And this is the first MRE that the company is doing. They're hoping, of course, to grow that. It's also, as I said, narrow veins, but high grade. And when I say high grade, this is at an average. So the grades here, average grades are 614 grams of silver equivalent per ton in the indicated, and they're 435 grams per ton of AgEq in the inferred category, which actually makes it one of the highest grade undeveloped silver deposits out there in the world. In terms of silver alone, it's actually even higher than Mag Silver's Juanes Appeal. In terms of metallurgy, recent flotation tests are showing good recovery. So we're talking about 93% recovery for silver, 97% recovery for gold. Arsenic levels were also tested for and reported. They're sitting at, they are surpassing 0.4% there, which the company says is acceptable. But I do hope that's also something else we can talk about further on in the conversation. More metallurgical testing in 2024 as well is coming, as far as I understand it. So again, not unexpected. Outcrop says that 2024 will be all about trying to grow this MRE, as the vast majority of what is really, um, well, the center really of a historically very important precious metals mining district, for Latin America and maybe potentially globally, depending on what time frame you want to go back into the future in, is, well, the saying is that it's still underexplored basically. Again, there's three more projects. All three are 100% owned. All three much earlier on the Lassonde curve than Santa Ana. All three are epithermal vein systems. Two of those are intermediates. But again, not necessarily the company's focus right now, so I'm not going to spend too much time on them. And generally looking at how Outcrop has developed over the last, let's say, a year or 2 years, from very early stage exploration on Santa Ana to now an MRE and potentially more soon. It's also interesting to see that they've changed their CEO. And so, Ian, now it's on to you. You're now the new CEO. You're a mining engineer by background, as far as I understand it, and your predecessor was an exploration geologist. He's the gentleman basically who ran the team that made this discovery. And this might be a good point to sort of start the conversation, because switching from an from an explorationist leading the company to, call it a mine builder now, might be suggesting that Outcrop again might be trying to build its own mine instead of driving Santa Ana to, let's say, a PEA and then selling it. Is that the case? Like, do you want to build, or do you want to sell?
So, wonderful introduction, by the way. So I appreciate that greatly, and thanks for the opportunity to be here. I am a mining engineer, and I've got about 25 years, a little over 25 years working in the industry, and 15 of those years are in South America. So I enjoy working and living in South America. I was previously Senior VP of Corriente Resources and took the Mirador project all the way through feasibility sale and the start of construction. So you would wonder, hey, is the mining engineer showing up to build a mine? I think the correct answer is I'm here because I believe that Santa Ana one day can be a mine. And obviously, there's a lot of work between an initial resource estimate and getting it to the phase to be able to de-risk it properly and put a project together. And that's really what my forte is. So Joe, who's still a director, did an amazing job coming up with the methodology of how do you create a target to discovery, and a discovery to create resources, and started with these first a very cluster. They're very close to each other, 7 veins, but mapping out, additional 22 targets, and that's still growing. So now it's about, obviously, the number one focus of the company is continuing to demonstrate a pathway to a much larger resource, but also taking into all the other factors to think about what would this look like as a future mine. And I have a saying. I giggle to myself a little bit when I hear the pitch, and they said, "Well, our goal is to get it to X size, and then we're going to spin it, we're going to sell it off."
Hmm.
Right? And because juniors don't pick when they sell, right? Market picks when they sell, and the majors pick when they want to buy. And so majors want to buy projects that can become future mines. And I'm in Vancouver right now. I'm up here for the week, heading back to Colombia today. And this is a part of a conversation that goes on all the time, right? You see projects with no end game. There's no way that they could possibly be a future mine. And that is the purpose of the work that we do today. And people do not buy projects if they think they can't become mines. And that's the goal. And so it's de-risking a project and demonstrating it has a pathway into future production, and lowering that increasing that possibility over time. So that is also a big part of the work and what's going on. I like how you mentioned the amount of money that we put into the ground. Me living in South America, we're watching every single cent right now to maximize that the money goes into the ground, and making sure to have a team that makes that sustainable.
Mm.
So right now, the focus is, okay, we have a resource. We've proven how this holds together. There's a possibility here. We can go into more detail on that, but also to be looking and thinking of taking the steps that are necessary to prove to market that this can become one of the more important primary silver mines in the world.
Mm. Let's to talk about how you do that in terms of steps. Is there a pathway from here directly to a PEA, or do you go to an updated MRE where you do an M&I resource and then move to PEA from then on? What do you think?
So I'm going to tell you first, this is what I think today. And the important part is to understand we have a group of professionals that are constantly thinking about these kind of things. So it's more like steering a very large ship. First, the number one focus is increasing the resource. We already have a very high number in measured and indicated. I think about 60% of the resources is in the indicated category. And that was important to demonstrate the density of a very high grade deposit, right? You don't want to say, oh no, it's really just blending high grade hits across our North Shoot. And so I think to put a package around a project that becomes interesting, you want to at least get to that 100 million ounce mark in order to have a sufficient project that becomes the interest of a mid-tier or larger silver player. And so we won't start down a PEA path until we get to some of those significant milestones.
Mm.
But it doesn't mean we don't start doing the work now. And then there's an additional pathway that we are working on, and I think it's fair to be frank. When you have an extremely high grade deposit, okay, that's a great starting point because it's an implication of profitability. The next thing I want to say is people, they always talk about narrow veins, narrow veins, narrow veins. But if you look at the other projects currently operating in Colombia, there's projects such as Buriticá, Marmato, and others that started off narrow veins, increased the number of faces over time. Buriticá is now producing 200,000 ounces a year of gold, right? So very narrow veins can produce really big, high productions when they're higher grade, right? Colombia understands how to mine in this style. It's a very common mining method. So it's got good miners and they know how to do it. It's very doable, and we have big projects around us that have started just that way. But if you have very high grade, it's indicative of very high value. The metallurgical test work also shows a very high recovery. And I think what gets missed a lot is the silver at Santa Ana is a sulfide. So it's not floating with a zinc. It's not floating with a lead or a pyrite or another associated with another sulfide. The silver is actually floating. So we're producing a very high grade precious metal concentrate. So high grade that it is possible to smelt directly. You could literally take that concentrate and create a doré. If you get paid for your silver in a zinc concentrate, you're only going to get paid maybe 75% of your silver if you're lucky, right? So it's not, you don't get the value out. In a doré bar, it's worth 98 to 99% of the silver. So you have a high grade, high recovery, and a high payable. This is kind of, I call it the trifecta. What's important about it is that it decouples you from scale. You don't have to have a really big project to be profitable. You don't need the need for scale to reduce the operating costs. And so that's another pathway we're going down, which would be take a very small pilot project and demonstrate that you could take up this project into production and be profitable. It's not the major focus, but it significantly de-risks the project because it demonstrates there's a clear pathway to eventually go into production. And if it's profitable at a very small scale, why wouldn't it be profitable at a larger scale? And so that's I would call it a secondary pathway, but it is something that we are looking into and working on as a significant strategy because it just eliminates all those quick. Can you mine it? Can you do it profitably? Can you recover it? Is this all doable? And you have something you can point at. And of course, it slightly de-risks you in terms of access to capital. It's not the solution, obviously, at that size, but it is a pathway. So those are the other things that we are doing in order to demonstrate this. And you mentioned something earlier. Just want to reinforce it. The true pure silver grade of Santa Ana is by far one of the highest in the world. And what also means it's almost three-quarters pure silver. It's true silver. And so when we say it's a silver project, it's a true silver project, and it's one of very, very few. I've actually only know of another that even has a resource that is a primary silver project. And so if you look and people are interested in how to find ways to leverage, silver price is delinked right now. It's undervalued and we had 3 years of deficit. How do you leverage yourself in terms of silver price? And then Santa Ana obviously is highly leveraged to the overall silver price.
Now, you mentioning some of the other mines in Colombia. I'm familiar with Aris Mining's Marmato. I believe that's one of the highest grade gold mines in one of the like it's top five or something along those lines. Not big, but high grade. It has kept growing over time, but that's sort of the approach that they've had is chase high grade first, start a small operation, and then expand from then
Right.
on. But you're talking about growing that MRE. So why chase size instead of chasing grades right now?
Okay, so the reason why you chase a very small operation is because obviously it's easier and quicker to permit. It's not it's not capital intensive. You could raise, I think we have quotes for a 40-ton per day plant turnkey is about $750,000. So it's not a burden on the company. But why do you look at in terms of scale, in terms of the resource is if you want to be interesting to a consolidator, somebody who is wanting to build their production pipeline, right? It has to be significant enough for them to be interested in it. And again, raising $750,000 for a very small plant, we could do it with equity, a silver loan, the convertible. There's a million different methodologies that would make it easy to finance. But if you start getting into that $100 million capital range, then you need the feasibility study, you need to have all the engineering work, and you need to make it worthwhile that somebody says, I want to add that production profile to my portfolio. And so then in that case, scale is important. And so it's the reason why we don't want to go down a pathway of a project development when you're looking at 37 million ounces and want to have to be able to put a limit around a much larger project that becomes interesting to others. But I want to have my cake and eat it too, right? I want to have all those different options available to continue to move and create value over an extended period of time. I've seen other projects where you hit a wall, right, where you're left with no options to create to create value for a company, and you're kind of stuck, and then the vultures come in. And so we want multiple pathways to create value, whether it's leveraged. You don't want to be just leveraged to silver. You don't want to be just leveraged to a resource. You want to be able to have multiple pathways of demonstrating value, right?
Sure, sure. So where do you go to chase that on the land package? Because I'm looking at a map here. The seven veins that your MRE comes from are sort of in the northern part of your titles that you have. There's a one long vein, Alaska, that is sort of the northernmost vein that is out there. Which of those veins do you want to go to test this year? When do you start? How much are you drilling? Talk to me about that.
Okay, I'm gonna answer that in multiple parts. First, even after the resource, there was even some, I think even Alaska was one, or at least a parallel vein to Alaska, where we had some drilling in it, but not enough density to be able to pull it into the resource. But my overall goal right now is to be able to demonstrate a pathway to a much larger resource. So we're really looking at some of the outside targets, some of those orange lines, I'm guessing, on that same map where we've mapped it at surface, done some trenching or channel sampling, so it's a bona fide target, and be able to make it a bona fide discovery. And then find out, that it's now on the list of, okay, we keep drilling this, we're going to be adding resources, and we want to create that pathway. So we're not even going to continue to extend along strike or extend at depth or re-drill right now on areas that are already a discovery because it's in the inventory, right? And we really need to demonstrate. So it's really about walking right now down, to the southwest on that map, working away from it. Because the other reason you don't want to take gigantic steps away is because you've demonstrated how you work with your community and landowners, et cetera, and you're building off of your reputation, and the way that you do business. And so you're kind of walking through this systematically. And the
Hmm.
other thing that's difficult to understand is these are ore shoots, right? So you have a vein. This is so it's not easy, right? I mean, you can see a vein on surface, you can guess how it's going to act underground, but the first step is actually to understand the structure of that vein underground, because the other piece is the ore shoot often does not act in the same way as a vein does. Its plunge can be different than the dip of a vein, for example. So step one, identify it at surface. Step two, make sure it has grade at surface. Step three is identify the structure of the vein underground. And step three is chase for the ore shoot. Which are normally extremely structural controlled, and this is same for Santa Ana and all these other mines that we just discussed earlier, right? These are structurally controlled ore shoots where you have a very high grade component of that vein. You might see mineralization at some degree throughout all the vein, but you're really looking for the higher grade section of these vein systems. So it's systematic. It takes discipline, and it's sometimes not as fast. So at the second half of last year, we went from pure resource to starting that hunting process, and I'm going to be frank, it was slow and inaccurate, and we were trying out a new drill contractor and it didn't work out. So we're going back to our old drill contractor
Hmm.
to start with, and we're in that we've demobbed and now we're going to be remobilizing to bring and start that work back up. I'm assuming it will take around February to get everything reset up and starting people back from vacations, and we need to still mobilize the drill to site. But that will be the focus, will be on converting bona fide targets to bona fide discoveries, right? Because we would like to say, okay, these were the 7 veins that were incorporated into our resource, and these are the bona fide discoveries we have, and these are where we're going to be focusing on adding additional resources and demonstrate this isn't going from 37 million ounces to 45 million ounces. This is going from 37 to 60 to 100, and be able to demonstrate a larger pathway. And so that's going to be the focus, the primary focus of the company in 2024.
How many meters do you think it's gonna get you to go to that, supposed 100 million ounce deposit?
So, and I'm going to talk to that in 2 ways. One is we have a huge amount of our resources currently in measured and indicated, and that was necessary. I think it was necessary. But as in these incremental steps, we can focus mostly on inferred because we can demonstrate with higher confidence how the geostatistics of these veins hold together. And so with 10,000, I think we can do about 1,000 meters a month with a single drill. So the goal would be to get to 10,000 meters in this year. The goal would be to be continuously drilling. If market changes, then we can add additional drills, but I don't see the value right now in going gangbusters with too many drills on site. And that could get us to the goal would be to be able to get to a significant point where we could do a significant increase in the resource. I don't think it's going to get us to that complete pathway. I'm guessing it will take until 2025 to be able to get to that magical milestone that we have in our head of being able to push the MRE above 100 million ounces. But the goal is to be able to demonstrate that pathway by the end of the year.
Hmm.
People can see how this is going to happen. And we will also judge the point of when we do that updated resource, because I don't want to make small incremental steps. I want to demonstrate that this is something that is going to be growing in leaps and bounds. So we'll be
Ho-
playing that by ear based on results and how we can execute on this year's plan.
Okay, so by the end of the year, and how many meters do you think you're gonna have put into the ground by the end of the year?
Our goal is to get 10,000. And one of the reasons we changed the contractor because they were nowhere close, right? We did since June about 3,000 meters. So it was very frustrating. So
Okay.
we would like to be able to get to that 1,000 plus meters per month. You're hunting, so your new pads, you're moving the drills a lot. So, but you also have to maintain productivity and accuracy. It's keen because that's what you're doing. The first few drill holes really aren't to, I mean, you can get lucky, is to hit that mother lode. It's really to understand the structure and the behavior of that vein to be able to track and understand the ore shoot.
Do you have an offer for that 10,000 meters already? Like, how much is that gonna cost you?
Yeah, the drilling contractor pricing isn't dramatically different. I think our average price of drilling is around $200 per meter, just the drilling component. So we're talking about $2 million. It's and then of course everything on top of that. So our average cost with a drill running is about $300,000 a month to maintain that drill, and we're working even to crunch that down. We want to make sure we're getting efficiency and driving as much value, cutting down on G&A. I'm in a single office in Colombia, which obviously is completely different than the cost structure in Vancouver. Bringing more of the team. I speak fluent Spanish, so I'm not afraid to have a lot of my team around me that are local, and I think it's important to keep that local content and it's cost intelligent.
Sure. I do want to talk about the G&A as we move on. How are you going to be announcing drill results with this one? Is it going to be vein per vein, hole per hole, or just everything at once? How are you planning that?
Yeah, in retrospect, I should have probably done it differently because we kind of went out searching and defining four different areas in the end of the first 3,000 meters, but obviously none of those four got across to a finish line. And I think the goal here would be to announcing them as packages, right? When you get between um, target, understand structure, and now you have a bona fide discovery where you have some idea of how that ore shoot, and describe it on a vein per vein basis, because that's the goal, right? It's like, okay, we had 7 before, now we have an 8 in our, and then we're going to have 9, and then we're going to have 10 that we know that are going to build out the resource, and that's how it's most likely. So it's not spotty. We're beyond the point where just an individual drill result can drive excitement, and I think it's important to be able to explain to shareholders how this fits into the bigger picture and the strategy. And so it will be it might only be 2 or 3 holes within a individual ore shoot, but we will be able to do that on a ore shoot by ore shoot basis.
Right. Okay.
That's the goal.
Okay. Sure. Just for a second, go back to what you said about drilling. You said it's $300 to keep the drill starting. I don't assume that's including assays. What do you think is the all-in cost per meter?
Yeah, so that works out. Math is pretty easy. That's $300 a meter all in. That's everything. That's the
Oh, that's
operational
assays too.
team, assays, the
Okay,
whole kit
sure.
and caboodle in terms of
Yeah.
operational less. And so the only thing on top of that would be corporate G&A, and then in both Colombia
Right.
and in corporate in Vancouver.
That's right. Okay, so it's 3 million bucks for the drilling. Are you doing any more metallurgy or anything else walking the bush?
We are, and sorry, the mining engineer loves talking about these kind of things, but when you already have 93% recovery from flotation alone, right? And it's a precious metal concentrate. I keep reinforcing this, right? You noticed a bit of arsenic, but that's a precious metal concentrate. That's not an ore issue, right? That's something that's already running 8,000 grams per ton silver, right? So it's a very high grade concentrate. So um the other, 7%, where is it? And the majority of it is native silver, and there's a little bit of electrum, but mostly it's native. So the thing we're working on now would be take a gravity separation method on the front end of a flotation circuit. Right. So to bump up the recovery, see what kind of recovery improvement we can get with gravity separation followed by a flotation. And I think it will be a dramatic improvement, but it also is environmentally friendly, right? We could potentially be producing silver doré, right, without leaching. And that's huge, right? That's a big deal. I mean, that's
Yes.
something we're striving for. And of course, gravity is just a physical separation method. And on top of that, we have a very inert tails, right? So and it's high grade underground mining. I think that the overall environmental footprint of a potential project could be extremely interesting, right? We have a kind of all these things going very positively for the project.
Right. Um, why I'm asking this is because I'm trying to work out how much money in total you're going to spend this year. So that's where we're going to. But since we're talking about metallurgy, I also want to talk about that because during metallurgical testing last time, as I mentioned, arsenic levels were 0.4%. I'm not a metallurgist by any means or a geologist or anything like that, but as far as I understand, that's no reason for concern. Concern might start happening above zero point 0.7 or even higher. But do talk to me about arsenic and other deleterious elements in here in regards to how much of a penalty, if any, they could be, as well as what they could mean for permitting of a mining operation or anything else, really.
Yeah, this is one of the interesting questions when we look at project development, right? It's very easy to understand your payables for doré. It's very easy to understand a payable for a copper concentrate. But when you get into zinc concentrates and lead concentrates and sulfide concentrates and precious metal concentrates, it's a moving picture, right? It moves a lot faster, which is another reason why we'd like to be able to just to get to doré, right? It's much higher payable. But we have gone to our friends, the ones who market and trade these types of concentrates, and indications back is that there would be no penalty, right? And I think a more important factor at this stage is how high of a grade of precious metal concentrate you can produce, and that's a real moving target. If we were talking gold, if you have anything under 100 grams, your payable is terrible. If you can get to 200 grams, your payable is okay, right? And so that has a bigger impact is how much, what kind of grade you can get into your concentrate. But from a deleterious element perspective, I think we're within the current norm of ranges,
Hmm.
right? That can change. I mean, let's be frank, that can change, and it depends whose smelter you're sending your stuff to. But right now, all indications is that we wouldn't see any sort of penalty for our material.
Hmm. Forgive the silly questions if they are such, but where is this like could you treat, but does arsenic pick up at depth? Does it pick up more towards the north? Is it like where is the arsenic? I don't know if it's a stupid question or not, but yeah.
So far, it seems to be a small percentage. I mean, it's in an individual drill hole, it's almost insignificant,
Hmm.
right? We don't see it, and we don't see it in our tails, right? We don't see any indications of having issues in our tails. It's when you're concentrating that material, right, into a concentrate where you're seeing it. But again, I think it would be because remember, this is 8,000 grams per ton, right? If you were seeing this in a zinc concentrate that might have, I don't know, 100 grams per ton zinc and you see a 0.4% arsenic, you might be concerned,
Yeah.
right? So you have to think that it's been ultra concentrated, any additional metals. So they're really insignificant.
Right. Okay. So where I'm coming from with that question is because I was wondering, like, I mean, does it pick up the higher up the mountain you go? There's more arsenic or something like that. I probably sound very silly right now, but
No, but it is a real concern when you see arsenopyrite, right? And
yeah.
your gold or silver is associated with that kind of mineralization because then it's a big, it can be very high percentages. So we're talking 10% of your material, and then you have to find ways to manage that issue, both in your wastes and your tails and in your concentrates. Um, so we don't see arsenopyrite within our deposit. You don't really pick it up in the
Hmm.
individual deposit, but obviously it exists as it exists, in any rock you pick up on the planet.
Hmm. Okay. But so 3 million bucks to drill, um, 2.5 on G&E. Does that sound reasonable? Or do you think you're gonna cut it below two?
Funny, our G&A is about a little under $100,000 a month and is mostly driven on marketing activity, and that to me is more market driven. So um I think that we can keep our all-in cost. My goal is to get it down within drill operating to about $400,000 a month. That's my goal, and bring it
Okay.
down to that level.
Okay. Because, well,
And we're talking metallurgical test work, maybe 100,000 or 200,000 additional dollars. We do have some, some minimal engineering and environmentally associated. We're going to be doing just a little bit of hydrogeology and geotechnical work also. But these are not big sums. These are not big numbered programs.
but that's way less than what I see in the filings of last year. I'm looking at them right now. Um, so last year was 1.2 in general administrative, 660 in investor relations, 530 in professional fees, stock-based compensation is stocks, I don't care, and then wage and benefits 550. Um, that's your almost 3 million bucks, right? Yeah, well, it's actually very close to 3 million bucks. So you want to go from 3 million to one and a half. So basically cut it in half.
And we're already partway there. I think we're
Okay.
already today at a current burn about 2.4. We've done some significant reductions. Uh, I don't know how to say. I'm gonna say this in the nicest way possible, right? My presence in Colombia is very helpful, right? It's and because I speak Spanish, it allows me to be run a much more efficient organization.
Hmm. Okay. Well, then what
And I
are
do I
you?
do the marketing, right? So I'm not afraid to get up and talk and be the face of the company.
But then what do you cut out of the budget to? I mean, cutting it in half is not an easy feat. So what do you cut out?
So we've already reduced some of the significant compensation. We've reduced overall personnel is a big piece. Marketing is always a manageable, increase or decrease. So if things turn around and market starts getting better, then I'm going to be way up on my numbers because obviously we're going to be spending a whole lot more time going to conferences, going out, telling people about the story, because there's value can be created from doing that. But the biggest reductions have been in salaries and the
Right.
number of bodies required to manage the company,
Okay.
right?
Just as
And I'm
long as
going
you
to I'm going to
don't.
go through an easy description, right? To get a part-time graphic artist to support you in Canada is $5,000 a month, and a full-time graphic artist in Colombia is $1,000. So it's those are the pulling things into Colombia, and I'm filling all multiple boots, right? By being in Colombia myself, a lot more of the local management, and it's continuing to be the executive management at the same time.
Right.
More bang
Just
for the buck.
just as long as you don't cut out Kathy, because I think she does a good job. Her and I met at a conference a while back, and she pitched me in the. She actually basically made sure that this interview happens, and you're not paying for this interview, so I mean, she did a good job.
Yeah, Kathy's not going anywhere. Yeah, she is a energizer bunny of productivity and efficiency. So yeah,
Yeah,
we're a great team. I love working with her.
I can agree with that. Good, but okay. So wait, you close the books at the end of the year. How much money have you spent total drill and everything? You said 300,000 bucks, and then metallurgy on top of that. So we're talking in the realm of like 4 to 5 million bucks for the total of this year.
Correct.
Okay. And how much money do you have right now?
Today we are pulling money in when available every so often on the ATM when it's not going to put a damper on share price. We had a pretty good time right at the end of the year, post November, which I would like to go back to because you're right. It's everybody's been incredibly slammed over the last month. It's been disheartening, but we can tell that there's a compelling story here that can drive significant value. So we have about $1 million in the bank today, and it might be a little bit higher than that actually,
Mm.
between Colombia and call it 1.5. So we have a little bit, with keeping our burn into a reasonable level to be able to time a larger financing for the budget of the entire year, based on better market conditions. And there's definitely an anticipation of that going on right now, which is quite comforting. It's a question of when. But the backdrop in silver is very interesting with the significant deficit. And we're not talking, oh, it's a 2 or 3%. It's like a 15% annual deficit between supply and demand in silver over 3 years. My only concern is we get to the point where it has to be like uranium until people are scrambling to actually fill supply physically. that prices don't start to increase. I hope there's a little bit of forward looking on silver, but it has a potential to have that kind of train wreck where people just cannot get silver to build the products and that need to be made for supporting electric vehicles or any other component of the industry use. Because that's the over 3 years, you know, I remember as a mining engineer in 25 years, people trying to tout silver as an industrial metal and kind of giggled because it really wasn't. But over the last 3 years, it's gone from about 60%, 50% of the consumption of silver was industrial. Now it's 60%. It is a true industrial metal now. And that industrial consumption, you're on some of the products are on that curve where things start going geometric. When it goes from 1 to 2%, you don't notice. When it goes to 2 to 4%, you don't notice. But when it goes from 10 to 20%, 20 to 40%, these kind of numbers put a massive strain on the supply.
Mm.
And we're getting into that point of the curve in silver. So when that creates a price correction is the question. But without a doubt, it's going to create a price correction.
Well, let's hope it's not quite like uranium, because uranium's run, what, 100% over the last year, and some of the equities, especially the ones of your size, haven't really done much by judging by my own portfolio at least. But that aside, how much money so you have $1 million in cash. How much of the ATM facility is still open?
Oh, I don't know, but I'm guessing I think we opened a $10 million facility, I think, if is that correct. So it probably still has another 8
I
at
thought it was
least in it. We
five,
just
actually.
redid it. About 5. Yeah, that sounds reasonable.
No, but I mean, I thought the whole ATM facility was five. I can
That sounds
go
right.
into.
That sounds right.
Okay,
Right.
sure.
I think we have to renew it every 18 months or something like that. So
Mm.
it's kind of a rolling number.
But that's what you're going to use to finance yourself through that $4 to $5 million spend this year.
No, no, that
Okay.
would not be the goal. The
Okay.
goal would be that allows us some throttle to be able to properly pick when we do a larger financing.
Okay, sure. Do you have any plans of optioning out or selling maybe some of the other assets in order to fund exploration here? And I mean, maybe you want it, but is that really a realistic scenario where you can do it too?
Absolutely.
Hmm.
In last year's transition, I got a lot of flack for it. It was one of the first things coming in, kind of maybe halfway walked as it was going on, was the acquisition of Zacapa,
Yeah.
picking up some additional assets when it was a little confusing because I'm not even using that gold component of the outcrop silver and gold anymore because we had silver and gold projects and that was the focus, but now we are 100% focused on silver. That is the major focus, and that's where we can create the significant value. So we have additional assets. But one of the reasons we picked them up is because they were so undervalued, and we knew that moving into a slightly different market, those become highly valuable assets to be able to divest. Worst case, they're a political risk insurance, but the real case was that these will create value for the company moving forward. And what's interesting now is I think there is an anticipation of another bull run across the sector, right? I'm not just talking, in silver. In this, it's across the sector. There's some anticipation of coming up into a starting of a new super cycle. How that plays out, it'll probably be a little choppy. But for the first time, you have people looking for bona fide assets because people, I think, want to be positioned for that new upswing. And so, yes, it's not even something we're hoping for. It's something that we're actively working on, is in order to make sure we have our data room in set. We have project descriptions on all these things. We can look at the status, know the title status, have everything in place. So when people, are starting to sniff and ask and look, we have things to demonstrate. And we are in conversations already with different groups over individual assets. And yes, we are definitely interested in divesting. I think the least interest would be a JV, right? Because I don't see value coming into the company because of a gold asset, right? I want to make sure it's where we continue on a pure silver. I'm not saying we won't do it, but it's not. I think more it would be to completely divest maybe a share component or a cash component that helps fund our focus operations and gives us a tie into Blue Sky, right? So that's more of the focus of what we'd like to do is truly spin out some of these assets.
Okay. Well, so that could be an alley for financing the company. What about warrants? You do have a fair share of warrants there, but what is it,
Yeah.
like 90 million-ish? I'm not sure. I'll probably have their state somewhere around here, but do you expect any warrants money to be coming in anytime soon?
We do have some. I think about half of those are heavily underwater and will be expiring soon. And there is a component if we have a nice little run. We're actually getting close to there because I think about the 30 cent level. I think some of the warrants come into play, and it is a part of the option. Um, so it is possible that there's some alternative routes, but right now that's would be nice, right? The number one focus right now would be continue what we're doing, working on the burn rate, keep things moving forward until we can finance at a better level with for the company for the overall program of 2024.
Right. Okay. Well, that's sort of my biggest takeaway, if you will. So it's basically you're trying to grow the MRE here, by a lot, not by a little bit. You're spending $5 million, give or take, on everything to try and do that while also keeping lights on within that budget. And you're hoping to do that on a 10,000 meter drill budget, basically. You're starting in February, or at least you're hoping to start in February and do about 1,000 meters a month and then report it as it makes sense as you go. Oh, well, I didn't ask you that. When is the next assay result then going to be? If you start in February, through February, you do 1,000 meters, and then you put 6 weeks to that, what are you announcing assay results in April, or how do you see it?
In it's a difficult question because we're trying to package it around the way I described it, and I would say if we're starting in February, it would be mobilizing, and I wouldn't really think it's getting to earnest until sometime in March.
Hmm.
And that would mean the earliest would be April. We just put out a news release and kind of a summary of where everything was going to date. But I can say that once we start getting in these things into a line, because they're kind of, there's start the drill, get to understand the structure, start hunting for the ore shoot. But as some of these targets are converting, it will be a nice news flow, right? But that's the goal. And that was one of the frustrations at the end of last year was we're going at 4 different targets all at the same time. None of them are really getting across that finish line, but they are all extremely close now. But 3,000 meters is just too painfully slow over a 6 month period. So about 1,000, I think we could be seeing a continuous update on a monthly basis as one by one these are coming into perspective. That's the goal.
Right.
That is the goal.
Okay. Good. Got it. Well, again, not too complicated of a situation here that I'm looking at. Grow MRE, 10,000 meters of drilling, spend $5 million to do that. Um, yeah, I think I'm basically all out of questions. What is a question that some of the smarter people you talk to ask you, but I'm failing to ask you here?
Oh, I think we went over. Okay, so I'll let you. The really sophisticated people want to know how fast we can get a pilot operation into production because they
Hmm.
understand how big of a de-risk that would be for the project. And that's big because I think some of the compelling questions are, is this possible in Colombia? Despite all the facts, right? Despite 10 kilometers south of us, there's an operating gold mine or some of the biggest gold, there's projects producing 200,000 ounces a year around us, right? Is there a pathway? And being able to demonstrate that to market is a significant catalyst. So I think in private conversations, there's a lot of focus on the pilot concept.
Hmm. Well, what is your gut telling you? How long can that take?
I tell them, I'll tell you when I get into submitting the permit for it,
Fair
right?
enough.
So
Yeah.
it's I I have enough experience in South America that this is about relationships and developing the relationship. So it's more than just, okay, we submit a permit and then 3 months later you get the first comments and then it takes another 3 months. And it's really about building the relationships in order to be successful. We're going the lowest route. It's would be small scale production size, very small, very, very small, that would qualify as small scale production. We don't have cyanide, right? We probably do a small dry stack tailings. It's underground with some backfill. Its footprint is extremely small. But you want to make sure you have all your ducks in the row and your community is on board and they understand the concept and why you're doing it, and it'll help demonstrate what it would look like in the future. So getting all those things aligned, and that's what we're doing right now. We are working on the permitting processes, but we're also working on the overall project schedule of how we would roll this out. So we're optimistic that by the end of the year, we'll be able to announce that we're turning the shovel over,
Oh,
putting the
well,
shovel into the ground.
it's an aggressive timeline. I will be looking forward to follow along with that story. Sounds like you're gonna have a lot of news and stuff to talk about. So yeah, I'd be happy to follow along. Thank you so much for investing your time in me, and I wish we can do this again soon.
Yeah, thank you for a really in-depth conversation. It was very enjoyable to really get underneath behind the black curtain and look at it.